Welcome everyone, this is Mike Hamilton from Trade the Easy Way, and so looking at the markets, getting an update today, January the 15th, and it's been a big week in the US for bank earnings. Bank of America, and today we've got Goldman's, Morgan Stanley, and you can see on this list, they are coming out before market opens. Alright, so let's take a look at the impact of that so far. So this is the Dow. I'll show you how I've plotted this up. So this is looking at the 2025 range, highs and lows of 2025, and the first official full day of trading, so Friday the 2nd of Jan is there. That's the range, and so we so far popped up and then we are moving sideways in the last week. But yesterday we touched this December 11th high and held. So if we can come back up to the highs and break, ultimately I can see us getting through the 50,000 mark, and 50,000 is such a big mark we may end up sort of bumping around it for a while, and possibly even pulling right back to this 49,000, 48,800 before pushing up. And but if this longer term trend line gets hit and fails, then watch out. So my plot for now is continued push higher as we get through this US earnings season. Incidentally, the UK earnings season is pretty quiet this time of year at the moment, but so if we hold this and ultimately can break this trend line, we'll see at least a test of 50,000. We're pretty close to it now anyway. If this market can run, we're going to see 52,200. My feeling is we could get quite choppy here. It could easily come back to the January 2nd 48,000. And then slosh around in this range. But if we ultimately fail around here and close under that 2025 high, then watch out, we're going to get a correction. So short term, I think we can hold this and butt up against this underside of that trend line. But if that fails going into February, March, then watch out, we're going to get a correction. Bear in mind this market has come a very, very long way. The earnings ratios are very high in the tech world. They're eye-watering still, even after some pullbacks. So if this market really pulls back, we've got an August level down there of 44 and a 50% of the 25 range down there at 42.5, give or take a few pips. So short to medium term, we're on an upward trajectory still, but if you look at the weekly, you can see why some people are getting concerned, because we are very high on many different levels. And there is some divergence as well. We are making new highs up here on this weekly chart and really flatlining on the RSI index. So if you come up, so we had it here, we came up, this is November, December 24, we came up with higher highs and a lower high in this RSI. So just as in MACD, you can look for divergences in RSI as well. So any close under 49, any close underneath that high and a lower close on this weekly chart at the top end of this funnel pattern could see an early year correction. But like I said, if we hold this, then we are going to retest the underside of that. So just be aware that at the moment there's no reason to short. Markets are holding December or 2025 highs, so no reason to get concerned. In the contrast to this is a weekly chart on the FTSE, and we are very extended on the RSI, but we could potentially go and see 10.5 if this keeps going. Alright, so any failure on this one, so we're bumping our heads up against the trend line as well. So at the moment we're breaking out from a trend line resistance. So if we hold that, then 10.5. Any significant lower close in that weekly chart, hold on to your hats. But I think the reason why the UK is breaking out like this is because we've had decent growth rate today. What I say decent, it's a third of 1%. It's decent in terms of what we have had and what was expected. It's still a pretty lukewarm, very low growth level. So again, if this any significant lower close on that weekly chart, particularly with this high RSI, could see this one pull back as well. But in the meantime, there is no reason to sell. Okay, sticking to the weekly charts for now. Gold, so 43.95 was a major area of resistance. We pulled right back into a breakup area and then did a 1, 2, 3, 4. So we're still in wave 5 on this latest move. So wave 5 could keep going, and we've got this 5,000 up here. So we're $380 away from that as we speak. RSI has been divergent, but it is only just creeping up. RSI can stay as high for as long as it likes. It means a stock or a commodity is expensive. It does not mean to say it is going to reverse. So pullbacks in gold are still viable at this stage. And look at the daily chart, you can see we are edging towards 4,700 on this chart based on October 25 highs. Okay, stocks. Before I do anything, let's just get an update on IQE, because I was in this, sat in it with a move, can't remember where I was now, sat in it with a move up to about 11.5, and then it just fell off a cliff. But back end of last year, we went sideways around this 5 mark, and then here we are broken out in up to 10. So this pullback at the moment into 8.2 is potentially viable. But steer clear. It's a cheapie. It's volatile. Yeah, I unfortunately this didn't work out. Had I bought very much later in the year, then I could have made some money, because that's doubled. That's gone from 4.7 to 10.5. Decent move. Anyway, that's just wanted to recap on that. This is BT. Now this is a bit of a slug. So we moved up to 218 and pulled all the way back to 172. I saw an open reach van yesterday which was rebranded, and the one big thing about BT is it owns all the UK infrastructure in OpenReach, and it's got this retail side which has been gradually pulling away into an EE brand. So they basically want to get, in terms of the retailer, they want to get a shot of the BT image, and they're well underway in doing that. So everything's already heavily into the EE brand. So if OpenReach over here alone this share is 183. I can't remember the valuation now, but OpenReach alone has got to be worth at least 120 plus. So I think they're vulnerable to a takeover, and that could be they're already wanting to split it anyway. Well, it is split. So that's why I like BT, because I think this is a takeover target, and so we are just sort of had this 3-way move up here. We're bottoming here. If that gets above £192 anytime soon, I can see this climbing. I think this is a 1, 2, 3-way move in the making. It's a solid cash earning stock, so the risk of extreme volatility is much lower on stocks like this. Well, it's a slug. So I am going to be buying into, I was hoping for a deeper pullback, but I don't think we're going to get it. But any push into the 170, 165 mark would be a great opportunity to buy. I'm just not sure we're going to get it. You never know. But volumes have been good around this drop here in November. So a significant increase in November, and it's level out now. These little pullbacks are still getting bought, but I'm just thinking that all these guys who bought here in November are potentially going to sit on this. As long as we come up on higher volume, I can see this rounding up and really begin to push up. But like I said, it's a very slow burn unless there's some significant changes, i.e. a takeover bid. Keep an eye on this one. This is Softcat. I've been talked about this before. Took some out there. Took a small move up here, but we've done a 1, 2, 3 wave correction into 1372, and we've seen a massive spike in volume and a push. So if we see 1450 again, no, 14, closer to 14, 14, 15, 14, I think that's viable for a potential move at least back into 1650, and longer term all the way back to 19 and 20 if that works out. So I like Softcat a lot in the UK. SSP went on a run to 213, got out of this before it broke, bailed out all this resistance at 190, and then it went to 210. Anyway, I'm not in this to get tops and bottoms, but if we hold this 190, hang on to your hats. There's a lot of volume coming in on this dip, so that could go back to, we've got a lot of resistance up there at 240, but any significant pullback to 175 on this is buyable. So we're a little disconnected with 50-day average there, so 175 would be perfect if we're able to see it. But this is a nice move off of the 25 highs here on SSP group. Advanced Medical Solutions, I haven't talked about this one for a while. It's been grinding, it broke up to 266, pulled right back to the breakup area. This is end of 24. 25 24 we dipped right up down here to 160. 25 we've had some pushes up that got sold into, but again I just think this could be rounding, and this is having a good day today. That could easily get back to 250, 260 plus if it runs £3, and here we are down at 225. So I like Advanced Medical Solutions, AMS. Commodities, not at all surprised to see oil come into this area. 62 and then start to sell. Talked about this before. So we had this bottoming pattern here, come up on the geopolitical situation right into an ambush zone, and I can see any pullback to sort of 61, closing under 59 and then grinding lower. So I'm looking for this to come under 50 and test 47 into the, as we head towards summer. I can see this popping back, but longer term, once that's set in, I can see that really giving way. Alright, so I think any pullbacks at this stage into 61ish could be sold. 62 will be a gift if we have a double top, but ultimately as long as there's no real geopolitical mess, should we say, I think this pullback will ultimately get sold into. So we've had a series of lower highs. Even this is marginally a lower high, and lower lows. So I think this is trending down, and I'm looking for pullbacks to get sold into on the oil. So that's why, in terms of Venezuela is a very, very expensive thick tar high grade oil that's had serious underinvestment in Venezuela. It's going to cost billions, many billions, to get the Venezuelan oil industry into an efficient state where the US and is going to benefit. So that's why I am not reckoning on that Venezuela issue helping oil. Far from it. I think it's going to damage it as long as geopolitics settles down and this starts to close on the 57. I'm telling you that because of energy stocks. I personally am avoiding oil stocks. I think this year is the year of the commodities. This is wheat. Keep banging on about that. If this is a head and shoulder and we ultimately close above 550, then I think at long last wheat can recover. So these dips here are seeing huge upticks in volume. Crop reports are coming out in a matter of weeks. Why would you sow wheat, a crop like wheat, when it's been the price is so low? So if the storage levels can come down and crop reports favour a reduced supply, then I think this wheat could ultimately take off. So we break up, pull back to the breakup area, then I think we can go and find some high numbers. If we close under 5, then I need to get out and leave it, if we open and close underneath 5. So this is high grade copper. Saw this plunge here in the summer, which fell right into this breakup area. So that's normal. It's a boomerang back to the breakup area. Slowly ground higher, started to get some spikes, bottomed out again, held this high here from March 25, and here we are getting close to this resistance level at 62. So any significant pullback in this, like here, on a week period like midsummer, any significant pullback to this area here or lower, 54, is buyable, with a potential move to who knows, maybe we can go back to 100. Okay, so this is extended at the moment, struggling up here, so any pullbacks are to be bought, but I'll keep an eye on it for now. I'm not in this. I would love to see this really fall over, or at least pull back I should say. I'll keep tabs with it. Natural gas, I'm showing you natural gas not because I think it's a buy, I'm showing you natural gas because of the cycle of something like natural gas. I mentioned before, contracts are all in place by November, so that spike high was sold into, and here we are, the big 3-wave correction. Anything, if we get towards about March, April, May, and we're here around the 25 mark, that's when I'd want to start to buy natural gas, with a view to that picking up through the summer and into November this year. Okay. Listen, I'm going to leave this video is 20 minutes long, so I'm going to leave this and I'll look at US stocks and a deeper move into UK stocks on Monday at 6, and I'll send you an invite to come and join me. Alright, stay safe, hope it helps, and I'll catch up with you on Monday.